Hi, my name is Kayla Thomas and I'm an HR advisor with TPC Vision. Our Vision team provides HR managed services to support the needs of our clients. We have put together the following slides to explain the Coronavirus Aid, Relief, and Economic Security Act during this pandemic. We want to thank you for taking the time to listen to our webinar today. We are here to support you as we all work through these unprecedented times together. This recording is being done on March 31st, 2020. So please note that if you are listening to this at a later date, that the information outlined in this presentation may be updated. Please visit our website to reference the most up-to-date information regarding the COVID-19 pandemic. As a legal disclaimer, this communication and any accompanying documents are intended for educational and informational purposes only. While we hope that you will learn a lot today, we are not attorneys, and the information should not be construed as legal advice. If you are seeking legal advice, you are encouraged to consult an attorney. Thank you. The purpose of today's presentation is to repair the economic damage caused by COVID-19 and provide additional protection to individuals and businesses who may lose income due to the pandemic. We are going to review the CARES Act that was passed last Friday. The components of the new law that we are going to review today include healthcare and benefits, retirement savings, unemployment insurance, educational assistance, and business provisions. First, let's talk about the provisions of the new law that are included under the Healthcare and Benefits section. First of all, healthcare. All testing for coronavirus is to be covered by private insurance plans. That includes fully insured and self-insured without cost sharing. It also allows a high deductible health plan paired with a health savings account to cover telehealth services prior to a patient reaching their deductible. The new law also allows individuals to use funds and accounts such as HSAs and FSAs for the purchase of certain over-the-counter medical products as qualified expenses. These three provisions are great for helping people during this crisis. A couple other benefits that are noteworthy. Number one, it also amends ERISA to allow employers the ability to postpone certain ERISA filing deadlines for a period of up to 1 year. It gives single employer pension plan companies more time to meet their funding obligations by delaying the due date for contributions during 2020 to the date of January 1st, 2021. It also ensures that federal contractors who cannot perform work due to the nature of their job duties as a result of COVID-19 continue to get paid. Now, as for the emergency leaves, our first webinar that covered the first law, the FFCRA, talked about all of the provisions under the two new emergency leave laws. Now, this new law allows employees who were laid off March 1st, 2020 or later to have access to paid family and medical leave in certain instances if they are rehired by the employer. So for any of you employers who actually laid off or furloughed your employees, and you hire them back, they may be eligible for these emergency leaves starting tomorrow, April 1st, 2020. Please note that under the emergency FML expansion guidelines, the employee would have had to have worked for you as the employer at least 30 days prior to being laid off. Now let's move on to the retirement savings section of the new law. First of all, in-service distributions. The new law waives the 10% early distribution penalty on early withdrawals up to $100,000 from certain retirement plans or IRAs for any of the following. 1. An individual who is diagnosed with COVID-19. 2. Whose spouse or dependent is diagnosed with COVID-19. 3. Who experiences adverse financial consequences as a result of being quarantined, furloughed, laid off, having work hours reduced, being unable to work due to the lack of childcare due to COVID-19. 4. Closing or reducing hours of a business owned or operated by the individual due to COVID-19. Or 5 other factors as determined by the Treasury Secretary. As many of you will probably recognize, the first few reasons are in line with the emergency leave bills from the first law, so just an FYI there. Let's look at some additional details now. Applicable on the coronavirus-related distributions made on or after January 1st, 2020 and before December 31st, 2020. It also permits individuals to pay tax on the income from the distribution over a 3-year period, or allows individuals to repay that amount tax-free back into the plan over the next 3 years. So that's really nice. Also, the plan administrator may rely on a participant's certification that he or she satisfies any of these criteria. Another noteworthy item is that retirement plans can make amendments and adopt these rules immediately. Now, this law went into effect, like I said earlier, last Friday, so this will be in effect immediately. Keep in mind that this is an optional benefit that may be available by plan sponsors, but is not required. Plan sponsors should consult with their investment company or advisor as soon as possible. Okay, let's take a look at a few other changes under the retirement savings section. Retirement plan loan. Eligible individuals may be entitled to a temporary increase in the amount available as a loan. This increase is limited to a period of 180 days from March 27, 2020. The retirement plan loan limit may be temporarily doubled to the lesser of $100,000 or 100% of the participant's vested account balance in the plan. Also, any plan loan payment that comes due from March 27, 2020 and continuing through December 31, 2020 would be delayed for an additional year. Subsequent loan payments must be adjusted to reflect the delay and any interest that accrues during that delay. Please note that plan amendments and notices to participants are required to reflect this relief. That's really important if you decide to move forward with this. Plan sponsors should consult with their investment company or investment advisor again to make these optional plan changes. One other noteworthy change is that the new law waives the required minimum distribution rules for account holders who are age 70 and a half or older that are subject to mandatory minimum distributions for certain defined contribution plans and IRAs for calendar year 2020. Okay, so now we are going to talk about a really important portion of the new law, and that is pandemic unemployment assistance. Now, the new pandemic unemployment assistance pays 50% of the unemployment insurance cost incurred by state, local, and tribal governments and nonprofit organizations, not part of the unemployment insurance system. Okay, so a few things to note here. The unemployment insurance provision created a new pandemic unemployment, or PUA, program. It provides $600 per week payment to each unemployment insurance or PUA recipient through the end of July 2020. So, many of you know how regular unemployment benefits work currently. This new law allows an additional $600 towards that unemployment benefit for your employees who qualify. Now, it also provides funding for the first week of unemployment for states to waive the traditional waiting week before benefits begin. Now, many of you know that a lot of states had already waived this waiting week. Missouri and Arkansas, for example, actually already waived the waiting period before this new law was enacted. So just make sure that you check with your state's unemployment offices if you have any questions. Now, it also provides an additional 13 weeks of unemployment to help those who remain unemployed after weeks of state unemployment are no longer available. It provides states with temporary, limited flexibility to hire temporary staff or rehire former staff to quickly process the unemployment claims. I don't know if any of you have tried to call your local unemployment offices or contact your unemployment states or their state offices, but they are obviously very busy during these times, and it's been kind of hard for us to get through to them. So just keep that in mind as you are processing claims and reaching out to those offices for questions. Now lastly here, it provides funding to states to help them maintain short-time compensation programs to prevent layoffs, as well as expand these work-sharing programs in the future. Now, an important note here is that the Pandemic Unemployment Assistance, or PUA, program is only in effect through December 31st of 2020. Important section of the new law is the educational assistance section. This new provision allows employers to provide a student loan repayment benefit to employees on a tax-free basis. An employer may contribute up to $5,250 annually toward an employee's student loans, and such payment would be excluded from the employee's income. This $5,250 cap applies to both the new student loan repayment benefit as well as the other educational assistance. For example, maybe it's tuition, fees, or books provided by the employer under the current law. The provision applies to any student loan payments made by an employer on behalf of an employee after the date of enactment and before January 1st, 2021. Now, I'm sure that many of you have also heard that traditional student loan payments have been deferred for a period of time. So also keep that in mind as your employees are coming to you with these issues. Now let's talk about some of the business provisions under the new law. Provision number 1, Social Security tax deferment. This new law allows employers and self-employed individuals to defer payment of the employer's share of the Social Security tax, which is 6.2%. That they otherwise are responsible for paying to the federal government with respect to their employees. Now, this applies to wages paid beginning March 27th, 2020 through December 31st, 2020. Half of the amount required to be paid by December 31st, 2021, and then the other half of the amount to be paid by December 31st, 2022. Now, an important note under this provision number 1. If you have a loan forgiven by the government, you cannot defer that 6.2% under this provision. Now we're going to talk a little bit about the relief loans here when we talk about provision number 3, but keep in mind that you cannot do provision number 1 if you have a loan forgiven under provision number 3. Now, moving on to provision number 2, the payroll tax credit. The new law provides a refundable payroll tax credit for the employer's share of the 6.2% of Social Security tax. The credit is available to employers whose 1. Operations were fully or partially suspended due to a COVID-19 related shutdown order, or 2. Gross receipts declined by more than 50% when compared to the same quarter in the prior year. The credit is for 50% of the first $10,000 in qualified wages paid to each employee. For employers who are eligible due to a decline in gross receipts, they will remain eligible until the gross receipts exceeded 80% relative to the same quarter in the prior year, or December 31st, 2020, whichever is sooner. Now, please keep in mind that you will need to contact your accountant for any more information under provision number 2, the payroll tax credit. Moving on to provision number 3, relief loans. Now, many of you will qualify for these relief loans. If you have under 500 employees, you may qualify. Employers may apply for the relief loans due to COVID-19. The Small Business Administration, or SBA, in conjunction with local banks, will be assisted, also known as PPP loans, are potentially forgivable, while the economic injury disaster loans offer longer-term, low-interest rate loans due to COVID-19. In addition, there is debt relief for existing Small Business Administration loans. Please keep in mind that we are unable to advise on these loans and that you will need to contact your Small Business Administration lender or visit www.sba.gov for more information as it relates to your organization. I would just like to say thank you very much for joining us for our webinar regarding the CARES Act today. Please contact TPC Vision if you have any questions. Also, please note that you can submit questions through our COVID-19 website on our www.paydaysmadeeasy.com website. If you are interested in learning more about TPC Vision services and all of the services that our team can offer to your organization, please contact us on our website or reach out to your sales representative for more information. Thank you guys so much and have a great day.